Here's a financial bombshell that could reshape how every major American corporation operates. Donald Trump is once again challenging a 54-year-old Wall Street tradition that investors have relied on for decades. Just 2 hours ago, the US president took to his Truth Social platform with a directive that's sending ripples through the financial world. Trump is urging the Securities and Exchange Commission to completely overhaul how publicly traded companies share their financial performance with the world. Instead of the current system requiring earnings reports every 3 months, he wants companies to report just twice per year. For those unfamiliar with the current system, here's what's at stake. Every public company in America must open their financial books quarterly. That's 4 times annually. These reports reveal everything from profit margins to debt levels, giving investors crucial insights into company health. Trump's proposal would slash this frequency in half, fundamentally altering the transparency landscape that millions of investors depend on. The president's reasoning centers on efficiency and strategic focus. According to his social media statement, reducing reporting frequency would save money and allow managers to focus on properly running their companies, rather than constantly preparing financial disclosures. Supporters of this dramatic shift believe it could reverse the declining number of publicly traded companies in America, potentially encouraging more businesses to go public without the burden of constant reporting. But here's where it gets controversial. This proposal strikes at the heart of market transparency, and critics are already sharpening their knives. Shareholders and market watchdogs argue that less frequent reporting could create dangerous information gaps, potentially triggering market volatility when investors are left guessing about company performance for extended periods. The question becomes, should companies prioritize operational focus over investor transparency? Interestingly, Trump isn't fighting this battle alone. Some heavyweight financial figures have quietly supported similar ideas. Though they've focused specifically on quarterly earnings guidance rather than mandatory reporting, Warren Buffett, the legendary Oracle of Omaha, and JP Morgan Chase CEO Jamie Dimon have both criticized the short-term thinking that quarterly reports can encourage. They argue that constant quarterly pressure forces executives to prioritize immediate profits over sustainable, long-term strategic planning. And this is the part most people miss. Trump attempted this exact same regulatory change during his first presidential term, but the initiative never gained traction. However, momentum appears to be building this time around. The Long-Term Stock Exchange recently announced plans to petition the SEC for permission to allow companies on their platform to report semi-annually instead of quarterly, according to Wall Street Journal reports. Trump's latest push includes a provocative comparison that's sure to spark debate. He referenced the common business wisdom that China has a 50 to 100-year view on management of a company, whereas we run our companies on a quarterly basis. This comparison to China's long-term corporate planning approach versus America's short-term focus adds an international competitiveness angle to the discussion. The global context reveals another layer of complexity. If implemented, this change would align American reporting practices more closely with international standards. Both the United Kingdom and several European Union countries already operate under semi-annual reporting requirements, suggesting that quarterly reporting might be more of an American peculiarity than a global standard. The SEC's current leadership, including Chair Paul Atkins, has previously expressed concerns about excessive disclosure requirements that burden companies unnecessarily. This regulatory philosophy could prove favorable for Trump's proposal, though the Commission hasn't yet responded to requests for comment about the president's latest social media directive. The stakes couldn't be higher for American capitalism. This isn't just a technical regulatory adjustment. It represents a fundamental philosophical shift in how we balance corporate accountability with operational freedom. On one side, You have the argument for giving companies breathing room to execute long-term strategies without constant quarterly scrutiny. On the other, there's the critical need for investor protection and market transparency that has underpinned American financial markets for over half a century. So, here's the million-dollar question that every investor, business leader, and market participant needs to consider. In an era where information travels at lightning speed and market confidence can evaporate overnight, is reducing financial transparency really the path to stronger, more competitive American businesses? Or would semi-annual reporting create dangerous blind spots that could destabilize the very markets Trump aims to strengthen? What do you think? Should American companies be freed from quarterly reporting pressure, or is this transparency too valuable to sacrifice? The debate is just beginning, and your perspective as an investor, employee, or concerned citizen matters more than ever.